Oh man. Uh I think the first robotaxi fare has to be first. Because if it's not, FSD is so behind schedule. So like it would be like completely nuts if Tesla sells. So when you say that it's when Tesla physically sells the first bot to the public, not one that they use internally, correct? I just want to make sure we're setting that. Yeah. Yeah, I really think it's going to be FSD first. I think probably again, this is like a timeline game, right? Because it's been pushed back so often, since really 2017. It's been this never-ending thing where it's two weeks, 2 months, 2 years, whatever. But I do think we're much closer to that than the bot. I think the bot is going to become useful uh, within the context of using a human or robot in a factory for Tesla probably sooner than people expect. I still feel like it's probably a few years out, at the very earliest 2025, where a Tesla humanoid robot could be useful, but it's just going to be reserved for Tesla. They'll get the benefits from using that bot internally. They'll lower their costs. They'll become more efficient. But then for it to be truly safe for the public to use and for it to be useful, I think we're still a few years out. Whereas Tesla already has a fleet of self-driving cars essentially that just don't have the software turned on because the software's not done yet. But with version 11 being rolled out this week, finally, the single stack solution for Tesla, I think that opens up the ability for Tesla to really focus specifically on hitting corner cases versus moving the entire end-to-end solution to be on one stack, which was obviously the huge lift that they had to do for the last months and really year or two that they've been working at this. So because of that, I fully expect FSD to have its first paid ride much earlier than the bot, as early as end of this year. I still sort of have that timeline where between Q3 and Q4, I would expect in the best case scenario for Tesla to have the very first paid fare with FSD with a robotaxi. I really do think so. I think it can. Doing some rough math, and this is assuming that Tesla's production goals are matched with demand. And this is something I'm actually working on a video about this literally right before we started talking. I'm working on this sort of production versus demand thing for Tesla and 20 million per year by 2030. I really think it can. So and then here's the basic math. Here's the very basic math. So again, assuming that 20 million per year is achievable by 2030, both from a production and demand perspective, which I believe it is, but let's save the math for a different video. We'll assume an average selling price of somewhere between $40,000 to $50,000 per car at a roundabout gross margin of say 20% without FSD, right? So if I pull out my calculator real quick, that's 20 million cars, right? 20 million cars per year, and then 50,000 ASP. So 20 million times 50,000. That's $1 trillion. Mental math. I'm so good at it. $1 trillion in revenue at 20% margin is $200 billion in gross margin per year from the car. And then Tesla has shown that from an operating leverage perspective, they're able to make somewhere between, like in today's dollars, around 15%. And I don't think it's unrealistic to assume a similar level of margin from Tesla in the future as they scale out more and more factories that are more efficient than the ones than the ones today, than the ones that are right now. So taking away that gross margin number altogether and just using that 15%, 15% on $1 trillion in revenue is 150 net income, right? 150 net income. If you assume a 20 PE, a price earnings ratio, which is, I think, very reasonable for a company that by that time, with energy and cars, once they're at this full ramp status, is a reasonable one because energy is still growing, and then you have all these software as a service things building up with Tesla, with full self-driving, so on and so forth. But they could even get a higher PE with those things in mind. But let's just assume it's 20. So that's 150 billion times 20 is what? 3 trillion, right? $3 trillion market cap. And then Elon Musk repeatedly has said that the energy side of the business is going to be not just as big, if not bigger, than the car business over time, and it's going to have a higher growth rate. So that's double the market cap. That's $6 trillion. The largest market cap company right now is Apple today. I think around 2 point something trillion dollars. It peaked at 3 trillion. So that's double your largest market cap company already with those two things. Assuming Tesla's projections are correct, and assuming that the roundabout figures that I've used turn out to be correct long term. So that's just very simple, basic math, conceptually speaking, that says that this is possible. There was a video from Ron Barron today as well on Twitter that used basically very, very similar math that tells a very similar story. I think the biggest question is, and again, not financial advice. My goodness, I should have set this at the beginning. Not financial advice. This is just me going through numbers, right? So really, the biggest thing becomes execution. Can Tesla execute, and can Tesla get to these levels? And will the market award it that price earnings ratio on that net income that that kind of market cap will call for? And with its software as a service, with its growth potential into the future, with the fact that the world is transitioning to renewable and sustainable energy, the fact that even by then at 20 million cars per year, a large majority of the vehicle fleet on planet Earth will still be gas, and the fact that you are entering brand new markets that have never had this technology before in continents that Tesla doesn't sell right now. So places like South America, Asia, a lot of parts of Asia, Africa, so on and so forth. I just don't see how it can't be the largest company in the world. But that's just my opinion, backed up by some simple math right now and a lot more detail in a lot of my other videos. But yeah, that's how I think about it. Ooh, fascinating question. I had a few tweets after Investor Day where I was quite fired up. I was quite fired up because a lot of the rhetoric I was hearing from a lot of institutional investors was that it was just all fluff. It was all pie in the sky. It doesn't make a lot of sense. Here goes Tesla again, dreaming about these things, and it's not going to happen. And I think in some respects, I understand why what Tesla presented seems like a huge marketing thing and something that doesn't really make a lot of sense, and something that is achievable because the vision is so large, it's so grand, and it's rare. How many companies have done this before, something like this before? It's very rare, if ever. But then you have to think about the context of who is what company is doing this. It's the same company that in 2014 announced that they're building this gigafactory in Nevada that was going to build more batteries than the rest of the world combined, lithium-ion batteries than the rest of the world combined, so they can get to 500,000 cars produced by 2020 per year. And everybody was like, you are the craziest person I've ever heard. That has never happened before. You're building cars. There's not going to be enough demand. It's impossible to produce that many. You're going to need 7 factories. You're crazy. And then lo and behold, 2020 came and they sold 499,550 cars, basically 500,000, like literally 500,000 cars. And they hit it dead on 6 years later. And for me, it's like, okay, so if Tesla's going to come forward and present a long-term vision for manufacturing, for energy, for vehicles, for software or anything, I have learned to take them very, very seriously because they have a track record of achieving seemingly impossible tasks, especially those around large-scale manufacturing, where most of the investor groups and folks that analyze those type of companies can't seem to wrap their head around that there's a new paradigm shift around manufacturing happening here. And I think Tesla could have done a better job perhaps making it more clear as to how they're going to get there from the demand perspective, from like, hey, this is why people will want this, versus what they always do, which is nerd out on the production and the engineering. you know? And you would think that the investing community would be like comfortable with that by now. You would think that by now they're like, hey, this is how Tesla operates. Like, this is what we come to expect. So when they say this is what it means. But it's the usual, well, we'll see. We'll see. And I don't blame them because they manage people's money a lot of the times. They make recommendations for people's wealth. Whereas retail, us on the retail side, I think have an advantage in this case where the only people's money that we have to worry about is our own. I don't have to worry about your money. I don't got to worry about no one else's money. I'm very clear about my videos. I do not give I am the last person you should listen to for financial advice. Okay. The last person. But I still feel like the long-term story of Tesla is not told in a way, especially by mainstream media and most money managers, that truly captures the long-term potential of the story still 10, 12, 14 years later. And so because I don't have that tie to those other people's wallets, I can actually sit down and gauge to the fullest truth of the story, what is the actual potential of this company. And because I've seen them set these lofty goals in the past, and because I've was there for multiple years, and because I really, really spent just countless hours and days and weeks and years researching this company, constantly testing my thesis, I have an outsized advantage that institutional investors do not have. It's very rare that most institutional investors are following just one story. They're following multiple stories. And I think there's a lot of complexities to the story that does require a little bit of faith, for sure. You do have to have a little bit of faith in the management team to actually make it come true. But when is the last time a world-changing technology didn't have that kind of culture or didn't have that kind of leader? You think back to so many technologies of the past. I mean, the two that really come up to my head that happened in the last, say, 100, 150 years, and they're two very different sort of fields, or three. You have the internet. Everybody, like, I don't know if you watch those videos from back in the day where people are like, what is the internet? It's just a series of tubes, It's like, and now look at where we are now. You had the smartphone, obviously, with Apple coming out with the iPhone and completely revolutionizing what it meant to have a computer in your pocket. And then you have air travel, airplanes with the Wright brothers back in the day. People thought they were literally insane, and now it's by far the safest and fastest mode of transportation on planet Earth, and tens of thousands of people take that mode of transportation every single day. So this is how I see the electric car revolution and the full self-driving revolution, is entirely within that context. And yeah, and so I don't know. I don't know. I don't know what else Tesla can do that would be outside of their usual sort of approach. I think Investor Day showed that when they tried to be a different company trying to explain something, it didn't come off right, because you can tell they were trying to paint I don't want to use the word dumbed down, but a simpler version. Like, they were trying to really communicate in the simplest terms what we're working on. But because they're such nerds and they're working on such huge things, there is a clash. There's this sort of like, it's on two different levels. It's on two different levels, and it becomes really tough to digest. And it's long, and it's 3.5 hours long. You can't, you can barely keep someone's attention for 10 minutes. You look, you see our video statistics. My God, it's like, I love when people watch my videos, but the average view time is 10 minutes because it's hard. It's hard to really focus on something when, you have a million things going on in your head and in your life and stuff. So I don't know. That's a very long answer to your question, but I think there's just a lot of complexities. I think to sort of summarize it, I think retail has an outsized advantage with a company like Tesla because of its complexity when it comes to how large the vision is. And we also are only responsible for our own money. And we don't have to we don't have to be afraid about making quote unquote outlandish claims out of fear of our reputation being hurt. Whereas I think institutionals have to be more mindful of that because that's the nature of their career. And I hope that changes, because there are many that I think are losing a opportunity of a lifetime, not financial advice, in my opinion.